Welcome to the live stream, guys. And today we have a packed agenda. So today we're going to talk about the SpaceX IPO that is blocked from certain countries. Lululemon tank when they reported the earnings, and we also got sunshine silver mining, an industrial middle super cycle that we about to start because of the investment in AI. And first, before I get into it, let's look at the Nasdaq. It is a pretty ugly one today, and I believe it dropped significant amount. So it is officially ended the 9-week winning streak. Um, if you look at the last stack today, everything is basically red, 3.85%. That's a pretty big drop compared to the last 5 days. It was continued to going up, and now it's kind of slowing down a bit. Like, look at that. It went from 27,000 to now 25,000. A pretty steep drop because right now, it's pretty normal because of the AI cycle super boom. But you see that on the on X or his social media account, Truth was complaining that hey, even though the job report is going really, really well, the stock market should not be going down. It should be going up, right? So never know what's gonna happen in the stock market. But let's get in with some of the biggest headlines that is happening today at June 5th on a Friday. So first up we got so Elon Musk and the IPO. So the anticipated public market debate targeting an astronomical 75 billion capital raise at total company valuations scaling past 1.8 trillion in market cap. Everybody knows that this is one of the biggest IPO of the year, led by underwriters like Goldman Sachs and Morgan Stanley, have strictly barred any investor based in mainland China or Hong Kong from participating in this IPO. So why are they not letting people from China or Hong Kong? It's because of the International Traffic and Arms Regulations, or ITAR. Because like SpaceX manufactures advanced propulsion systems and operates Starlink, which has become the main kind of critical modern military communications. The U.S. government views the company as a sensitive defense contractor. Underwriters are taking zero risk, even going as far as geo-blocking IP addresses from Hong Kong and Shanghai to prevent access to the pre-IPO digital data rooms. While JPMorgan Jamie Dimon is aggressively pitching the deal to high net worth client S&P, Global dropped a bombshell by confirming that they will not fast track S&P and SpaceX into the S&P 500. We got this news kind of just now. Under the index rules, a newly public company typically needs a track record of sustained profitability and market seasoning before index um, inclusion, meaning that past index funds won't be forced to buy billions in share anytime soon. So this is a new kind of that was dropped recently. SpaceX was also not included in the S&P. So two main news, like mainland China and Shanghai cannot invest, and it will not be added into the S&P 500, which is one of the biggest, largest fund. And also SpaceX is not profitable yet. So that's kind of the one main risk, because you don't want everybody to buy into a company that is just dropping, that is not, I don't think it's dropping massively, it's just not profitable yet. So if you don't want, you definitely don't want to invest anything that is not profitable, just very high risk. And SpaceX is currently investing heavily in the AI space. Lululemon. So Lululemon tanks after earnings suffer a brutal blow with sales plunging 12.5%. So this is a big shocking event, and it now is one of the lowest since 2018. Lululemon used to be one of the most beloved stock in the market, but it drops. Let's kind of look at a bit of a context. So the drop was because it have an ugly revision to its full year sale and earning guidance. They lowered the guidance. So management openly blame a combination of negative media coverage and a string of underperforming product launches. In the premium retail space, a brand's greatest assets is pricing power and the cultural equity. Right? Lululemon's misstep have opened the door to hyper-aggressive competitors like Aldo Yoga and Ferrari to steal market share. When premium brand has to cut outlook, Wall Street interprets it mm, uh, as a sign that everyday consumer is fully pushing back against premium price tag. So usually women they are very good at like hosting local events at local kind of yoga studios or in their stores to um, do yoga together, kind of like a lifestyle. But now they're moving away from that also because the CEO is kind of firing at the new CEO. The new CEO is about to start in September, and then the old CEO is just not happy about the new CEO's direction and stuff. So a lot of bad press that is going into Lululemon. That's why it's kind of getting and putting them in a tough spot to try to figure out what is the next step and going forward. Next one, we got Sunshine Silver raise 270 million in US IPO. Why do I want to talk about this? So this is pretty relevant. So they debated under the Nasdaq under the ticker SSMR, raising $270 million by pricing 20 million shares at $13.50. Despite, despite pricing at the bottom, investor demand exploded at opening bell, pushing the stock up 27% to $15 and valuing the company at $1.9 billion. So the capital injection will directly fund the resurgence of historic Sunshine Mine in Clark, Idaho, which sits on one of the highest rated pure silver resources globally, boasting an average diluted grade of 1,022 grams per ton. The asset holds over 103 million ounces of the indicated silver resource, aiming for a 2027 restart with the projected 24-year mine life. So this is not like a play on silver jewelries, right? Because silver demand is hitting record highs uh, because of because of the vital kind of components in solar panels, electric vehicles, and AI data center power grids. Better yet, the site featured a permanent refinery capable of processing antimony and antimony, antimony, a critical mineral essential for like military ammunition and high-tech manufacturing. With China recently tightening its grip on global antimony exports, SSMR is positioning itself as a crucial domestic national security vetted alternative. So really good at kind of processing silver. So it is a company that investors are looking to kind of lead the United States into like a frontier above processing the silver and put it into AI, put it into AI data centers, vehicles, and military equipment because China have all the resources, right? And right now, Wall Street is looking at this some sign silver to catch up with the United States. So it can be a pretty interesting kind of landscape, and we can keep an eye on it and see where it will go. Because the silver is just it can have so many use cases, and it is just a critical component that United States want to secure. Next up, we confirmed schoolworm case in Texas sent two biotech stock higher. So bit of a context here. The confirmed detection of a single new world screwworm case in South Texas triggered a sudden defensive rally in animal health biotech stock, causing Zotec ZTS and Elanco ELAN to spike. This is the first domestic detection of the flesh-eating parasite in the United States in nearly a decade, found in 3-week-old calf in Solava County, Texas. The screwworm fly lay eggs in open wounds, and the larvae literally consume living tissues. It posting a catastrophic threat in the U.S. cattle herd that is already sitting at a 75 year low. So why is so the USDA has an aggressive lockdown and 12-mile quarantine zone to stop the transport, which is how the parasite spreads and is dropping millions of radiation sterilized flies to halt reproduction, because a massive outbreak would decimate the multi-billion-dollar livestock industry. So people are just freaking out when they discover this new kind of screwworm kind of parasite. Um, and Wall Street is right now rushing into Zoetis and Elanco, both of which hold pre-existing FDA emergency authorization for specialized like anti-parasite livestock treatment. Elanco CEO uh, immediately went on record stating that they have more than sufficient supply to deploy this case if anything goes. So that's kind of the reason that the two stock is going up, because the one is very dangerous. You don't want anything to do with it, and you'll literally wipe out the one of the biggest livestock in the United States. And beef price is going up a lot too. So nobody really want a parasite that kind of destroy the livestocks. Coming up, we have JPMorgan banks and going into a tokenized deposit. Wall Street's blockchain war is about to start. So JPMorgan, Bank of America, Citigroup, and Wells Fargo has formed a powerful cohesion under the clearinghouse to engineer a said regulated settlement network, officially slated to go live in 2027. So this is a direct defensive strike against like commercial stable coins like Tether and USD coin. Large institutional corporations are increasingly using stablecoin because they offer instant 24/7 low global settlement, whereas traditional banking rely on legacy batch processing that can take days. Whereas traditional banking, mm, by launching the tokenized deposit on a share permission blockchain ledger, these banking titans can offer instant, programmable 24/7 financial settlement, make it way faster. So the core kind of financial mode here is like, unlike like a private crypto stablecoin, tokenized deposit represents direct legal claim against a regulated bank deposit and balance sheet and carry FDIC insurance backing. So this allows Wall Street to offer a more efficient of blockchain technology while maintaining the safety of a traditional banking system. So banking system is just moving so fast right now because of the blockchain technology. Like Robinhood already introduced blockchain on many of the different assets, even on stock. And when all the legacy bankers are kind of basically catching up to this, hey, blockchain is a great technology. We could definitely leverage it and become more efficient instead of taking days to actually like process some of the process some of the documents and some of the things that customer want to do. We can process it in maybe minutes or hours. All right, DocuSign, the tech growth illusion, right? DocuSign posted a seemingly strong Q1 earning report, beating consensus estimate and expecting its Q1 revenue by 9%. It grew Q1 revenue, expanding its Q1 revenue by 9% year over year to 830 million. Management even sweetened sweetened the pot by raising their full-year revenue guidance. Despite this, the stock plummeted 4.6% pre-market. So this is kind of like the reality of post-pandemic mature tech stock. This market reaction illustrates the unforgiving nature of the mature software company. At 9%, growth rate is perfectly healthy for a standard business. But for a enterprise tech company, it signals that the high growth days are officially kind of over. If you look at it deeply, like some of the competitions that DocuSign is facing is Adobe Sign. Right, back in the past when the COVID happened, everybody was using DocuSign to kind of sign documents. But now, we are in a world where people are still going on the office, so not everyone is using DocuSign. And now it's transitioning into more in person. And also competitors, every single competitor you can think of is offering kind of electronic document signing. So DocuSign is just need to, I think is, in my opinion, just need to expand further. And the last one of the day, we're gonna talk a little bit about the box combat right here. So the box office combat is a pretty interesting one right here. So the domestic box office generated a stunning $1 billion in aggregated and revenue throughout through May, securing a monumental post-pandemic milestone for the theater operator like AMC and Cinemark. So people are going back to the theaters, right? So why is this historic? Because one reason that it was historic is because for the first time in modern box history that the milestone was hit without the Marvel superheroes. That's right. There's no you've seen these like Avengers. These are one of the crowd favorites, and for the first time, none of them was in the slot. You still gotta wait a couple years for this to happen. But the audience are showing a strong appetite for diverse and kind of their and more diverse and kind of release that is cover many wide different ranges of topics. So this is definitely a very interesting kind of kind of a kind of going to a different direction. Audience really, I guess, they really like the movies that is coming out that is interesting enough. They're willing to pay for it. Like if you go to a movie, it's not even that cheap, right? It's like 13 or 14 bucks. Like you got popcorn and drinks. It costs nearly $23 or $25 for a movie ticket. But the consumers, they are not feeling it. They're not feeling the pinch anymore. They're still going because not even though there's no superheroes in it. But yeah, I think that is about the end of the video. If you guys enjoy the market update and the live stream, make sure to give this video a big thumbs up. Don't forget to hit that subscribe button. My name is Calvin. I'll see you guys next one.